Hey everybody, morning. Dun, 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 dun. Well, you like the monster today, huh? Uh, Welcome everybody. Morning monster. Has more to do with what I'm drinking. Yeah, it goes back to once upon a time. We were trying to name the show, and they were like, "Why don't you call it something like Morning Joe?" Except you're not Joe. You're like Morning Jeff, or like morning cup of whatever. And I was like, well, right now I drink monsters pretty much exclusively. Yeah, I just drink one a day first thing in the morning. It's like how I get my dose of daily dose of caffeine. And so that's how it became the morning monster. And then eh, whether you realize this or not, the monsters most days typically have something to do with the topic of the like the monologue topic or the show kind of topic. I've gotten, I guess, better and sneakier at kind of how it integrates. And some days, like today, I wasn't sure how the what the monster should do to indicate layoffs, but some days it's tricky. Like, how do you tie that in? Other days, it's more clear cut. So that's how that kind of goes. So yeah, and Amazon's not really hiring a bunch of robots; they're building a bunch of robots, and we'll talk more about all this. Yeah, this is today. The announcement they made is more about AI workforce, middle managers, and stuff like that. We'll talk about. I'll get into that here in just a moment. So, welcome to the show, everybody. Welcome, welcome. It's a crazy day. Well, yesterday it was 30. I'll address that here in a minute. We'll get into it. So I want to welcome everybody back to the show. There's a special kind of language that big companies use. It's a beautiful poetic language filled with words like synergy, optimization, my personal favorite, right sizing. It's the kind of language that makes you feel like you're part of something grand and innovative right up until the moment that you're right sized right out of a job. Goose and I talked about this coming. Uh, he he was a Lieutenant Colonel Goose. I'm talking about. He uh, he was like, JT, how do you know when the problems are about to get worse? I was like, here's my big sign. Saw this during the dot-com bubble, saw this during the great financial crisis, saw this during the COVID crisis. When companies start announcing that they're going to lay off thousands of people, and it's not just onesies or twosies, but you see this repeated theme from tons of big companies announcing thousands of layoffs. That's the point in time where things are about to make a change. And the stock market is just potentially days or weeks away from realizing that there's a systemic problem in the economy, and because giant layoffs aren't normal, right? And we see it hitting repeatedly. That's a sign that things are about to go down the toilet. So this is just yet another cog in the wheel right now. I mean, this is like we've seen a few of these. It's not hitting like every day. We start seeing these announcements coming out like every day for a couple weeks on end. Big problems. Big problems in the economy. So, yeah. And as it seems, Amazon has been studying that corporate dictionary about right sizing, optimization, and synergy. And yesterday, they just officially announced they're planning to right size about 14,000 of their corporate employees right out of a job. Now, let's be clear here. This isn't the usual story about warehouse robots getting faster, how they're going to replace all those warehouse workers. This is the people in HR, the people in management, the people who write emails with that beautiful corporate language. You know, about 4% of the entire corporate workforce is about to get the hammer. And here's the kicker, even at 14,000, this is actually the biggest round of cuts that Amazon has ever made. Though, if you believe some of the whispers coming out of Seattle, that number could eventually climb as high as 30,000 before this whole thing is right-sized down. And this all comes right in front of the holiday season. The holiday season? That's going to suck. So what's the real story here? Well, classic tale. Remember the pandemic? Well, we're all locked in our houses, not out there doing the stuff we normally do. And we all started ordering crap from Amazon collectively. And Amazon remembers they hired people like they were stocking up for the apocalypse. It was a frantic, glorious explosion of growth. But guess what? That party's over for Amazon. The lights are back on. Amazon is looking at its balance sheet with a massive hangover of that spending. And they're thinking about, we could probably do more with less. But it's more than just a post-pandemic diet. CEO Andy Jassy, in his infinite wisdom, has decided the company has too much bureaucracy built into it right now. He even set up an anonymous complaint line to hunt down so-called inefficiencies. That's great, right? When you tattletale on your fellow workers. And what's the number one inefficiency in any corporation? People, especially middle managers. So a lot of those bureaucrats, well, they're going to now find themselves with a lot more free time, let's say. Then there's my favorite part of this whole saga, the return to office mandate. Amazon, in a move that screamed, "We love our employees to death," demanded everyone back to the office 5 days a week. It's one of the strictest policies in big tech. And guess what? It didn't quite work out as planned. Not enough people quit. So now, in a truly genius HR innovation, if you're not swiping in the office because you live too far away or possibly for other reasons, guess what? You're being told to voluntarily quit. No messy firing, no severance packages, just a clean, efficient, utterly ruthless way to cut some fat with no consequences for the company. It's a beautiful, dystopian, corporate overlord kind of way. But here's where it gets kind of interesting for all of us. Why is Amazon, the invincible giant in the room, doing all of this? Well, the cracks are forming. The giant is stumbling. And when a giant stumbles, it potentially creates some opportunities. Now let's talk about the cash cow. Amazon Web Services, AWS. For years, AWS has been the engine that has been powering Amazon's growth under the hood, the undisputed king of cloud computing. But as goes, when you're the king, everybody guns for the king. And now this king is looking a little bit shaky. Their growth has slowed down. Last quarter, they only grew 17.5%. Which sounds like a big number until you look at the competition. You got Microsoft's Azure grew at a staggering 39%. Google Cloud grew at 32%. While Amazon is going to have to lay people off, its rivals are starting to munch away at its lunch. And it's not just the revenue. AWS profit margins have been taking a hit too. They hit a record high of almost 40% earlier this year, but by the second quarter, they fell to 33%. That's going the wrong direction. Their stock performance tells the same kind of story. This year, S&P 500 is up 16% so far. Microsoft up 23%. Google up 37% this year. And Amazon, measly 4%. Possibly even going negative. They've almost been sitting still. They recovered from the big dip that we had on Liberation Day, but it's been the worst performing stock in the entire Magnificent Seven. Ooh, ouch. So here's where the investment opportunity kind of comes in. Number one, the competition, the money, the growth, the momentum. It's all flowing into Microsoft and Google right now. They're winning the cloud game, the AI cloud war, if you will. And their stock prices reflect that right now. Microsoft's Azure just crossed $75 billion in annual revenue, growing nearly 40%. Google Cloud printing money with 32% growth and profit margins that have doubled. And if you're looking where the smart money's going in the cloud space, well, not really pointing to Seattle right at the moment. But what about Amazon itself? Is it time to count them out? Well, not so fast. This brings us to the investment opportunity number 2, the contrarian bet. Now, there are analysts like those at KeyBank who believe that investors are completely undervaluing Amazon's AI potential. They see a world where all these job cuts, all this efficiency gains, all this right sizing leads to a leaner, meaner Amazon that finally figures out the AI strategy that they need. They're putting a price target on the stock that suggests a 30% jump from where it is today. It's kind of a risky bet. It's all a bet on a comeback story. But if Jassy can actually pull it off, the payoff could potentially be pretty massive. After all, Amazon is still the cloud market leader with over 30% market share. A lot of stuff runs on AWS, as we found out last week when the internet kind of took a pause for a day. And finally, here's the big picture. The investment opportunity number 3. The AI automation wave. This isn't just an Amazon story. It's happening everywhere. A recent Senate report suggests that the AI stuff that we're working on now could eliminate hundreds of millions of jobs in the U.S. Well, there's only 300 million of us to start with. If you believe the numbers yesterday, almost a 25% unemployment. Well, hundreds of millions of jobs could be like half of us. It's kind of weird. Yikes. And every time a company like Amazon announces a massive layoff to boost AI-driven productivity, well, it's another check mark on the list. The real winners might not be companies cutting jobs, but the companies providing the tools to do it, the ones that are selling the digital picks and shovels in this AI gold rush, or maybe the robots coming for those 600,000 warehouse worker jobs by the 2030s. Think about companies that specialize in automation, robotics, AI software, optimization stuff. This is a sector that's only going to get bigger, possibly explosively bigger, as more and more companies follow Amazon's lead and integrate these ideas and products. So as 14,000 people, possibly many more, get ready to update their LinkedIn profiles and hit the job markets, this is kind of telling us a story of a giant trying to find its footings, a story of hungry rivals seizing the moment of a stumble from the giant, from the king, and a technology revolution that's changing everything that we've known in this. I mean, this is a paradigm shift, whether you want to believe it or not. It's going to be a brutal story for sure, but for those of us that can stay ahead of it, it's a story filled with opportunities if we can take advantage of it. And that's what we got for this segment today so far. Thanks for being here, everybody. Morning. Good morning. Good morning. Glad to see everybody. So we got, roll back up, look at Ed, Don, Logan, David, Rob, Terry, Craig, Mad, Diane, Scott, General Rush. Good to see you, sir. Jim, Mark, Serge, Darren, Rob, B, Rongamer, Ted, Hugh, Andrew, Kevin, David, Skaggs, good morning. Frank, Rob, Ivan, Marianne, Cliff, James, Jason, Rob. Good to see everybody. Good to see everybody. And today at 5 p.m. So for those of you that, I mean, there's people every day that make requests and they're like, hey, JT, can you look at XYZ? Today is the day that I do that at 5 p.m. Eastern time. Make sure you come to 30 Minutes of Awesome. For the first hour or so, we'll do, open up everybody, all the subscribers of the channel, and then we'll go to a members only stream and ask me anything type of deal. So if you want in on the members only part where you can ask me anything except for personal financial advice, If you need that, hire and consult a financial advisor. But all trading involves a substantial risk of loss. So past performance, not necessarily indicative of future results. I make predictions. Sometimes I get it right. Sometimes I get lucky. Sometimes I get it wrong. And this presentation is intended to be informational, educational, fun, and entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade those things, you might lose money. Be careful out there. Be careful out there, everybody. And we've got the big show coming up tomorrow. The big show. In case you didn't know, FOMC meeting starts today, wraps up tomorrow with our potential rate cut. Seems like it's almost a foregone conclusion. We'll do the rate cut. Let's see, DGS2. Yeah, we've got plenty of room to do it. Plenty of room to do it. Funny enough, the Fed funds rate hasn't. It's actually been running a little rich. They haven't quite gotten it down. You know, it's supposed to be in the range, but it's been running at the high end of the range, not the middle of the range. So it's actually been running on up there closer to 4.25 instead of down at the bottom of the range. It's kind of interesting. So they're going to push this potentially on down. We're seeing the DGS2 push down. So they've got room to cut. So we'll probably see this cut another 1/4 point. Push us down in the 3.75 to 4 range. Yeah. Got the room. And if we keep this party going, we can maybe do a second cut toward the end of the year. We can keep flying parallel here. What's funny, the market always chases, the Fed always chases the market rate. DGS2, pretty much the market rate. It's the 2-year constant maturity rate. And the Fed just kind of chases along with it. And chase it on the way up, chase it on the way sideways, and chase it on the way down. Now, every time in my history of trading, every time we've gotten this orange line above the blue, it's been a countdown for some sort of financial crisis hiccup thing. The last one was during COVID. The one before that, great financial crisis. The one before that, dot-com bubble. And I didn't really trade before the 90s, so I don't really have much data on that. I mean, I can look at it, but I don't have much real-world experience to know what really happened in the market. I wasn't really keeping up with the market before that. So in the modern era of me trading in the real markets, you know, I did trade paper trading starting back here, but I didn't know what the fudge any of this stuff was, so I didn't pay attention to it. Are we going to have another crisis? Do we make another pop before we do a drop? This will be interesting. This one, every one of them is different. So we'll see what happens here. We do have more room to cut. So just looking at the micro, just what we got going on right here, got more room to cut here. But the more cut we do, the more inflation ramps. But jobs are being weak right now. Potentially up to, potentially hitting 25% unemployment. That's long-term unemployed people. 25%. Funny thing happens in the government's numbers. Once you're unemployed for a couple weeks, you drop off the current unemployed rolls. Once you start not having unemployment benefits, you drop off the rolls. So if you're having trouble finding steady work, you don't really show up in the count. That count's estimated to be upwards of 25% right now. of people long-term out of work. 25%. That's the kind of numbers we hit when there's a big problem. Like, it's kind of numbers we hit during COVID. It's kind of numbers we hit during the great financial crisis, recession. So, more stuff kind of working in the background here. Now, how do we making the money today? Let's take a look at how our indexes are doing. Market's been open for a minute. Yeah, starting out a little green. Like to see it. Let's see, jump down in here. Nice little pop this morning. Gap up. We'll fill that gap eventually. We'll come back here maybe tomorrow on FOMC. If that gap is left in here, that'll be we'll revisit that. We don't leave these open. Not in futures. Futures will come back for that one. Now I speculate we come up here. Now we're a little bit above my range. Might head on up here, 29.72. If we do that, if we go like this before tomorrow, the odds of this have increased drastically. Market can't just keep going way higher really fast. Just can't. We'll come back. We'll flush out people. You know, eventually we run out of buyers is what happens. And when there's nobody left on the bid, everybody's on the ask. The ask plummets until we find people on the bid. I kind of speculated that this might be what we see. So far, we're getting above this one. I mean, if we just go right up to this one immediately, this all kind of shifts up just a little bit. If we pop on up here, then retrace, then go on up. This all started out as very corrective, so large swings down like we saw back here a couple weeks ago on Friday the 10th. That's kind of part of the game when we do these three-wave moves like we have right now. So, caution. Caution, caution, caution. Don't really see us hitting 7,000 yet, but I mean, it's possible. If we do this on FOMC, that could be the tippity top. If we just take off like a rocket. So, warning. That's what I would say, a warning. Now look at the cash index. Look at those gaps. Gap, gap, gap. Right up to the 16. Wow. Crazy. So zooming out, looking at the daily chart here, we've got this bigger level up here at 71. This is the big bounce pattern here. From Liberation Day flush, which was bigger than COVID. That was bigger than the COVID flash crash. Only lasted 10 days longer. A lot of people have, nobody really thinks about that. This was 100 points bigger and lasted 10 days longer than the COVID flush out. Right there. Yet, it's just kind of a shrug for most people. This didn't get much attention here. Potentially coming on up to 71.30 is the extension of that, the 1618. So we pulled back, came up, got above the 618 level, kicked off the potential to come up here, 1448. We struggled there for a couple weeks, ramped on up, revisited the 1272. Now we might be on a path at 1618. If we just do that without any more pullbacks, that could lead to that very quickly, and possibly a revisit of the weekly, the 3-day roadmap line down here, the weekly roadmap line down here, And the monthly way down there. We haven't been down to the monthly roadmap line in a few years. Last time we were down there, we got close right here during COVID, but we didn't touch it. Last time we were down there, it's coming out of the great financial crisis. We're due to touch that again. It's been a little while. So there'll be a bigger market correction take place sometime. And we're definitely getting up here in the lofty zone. Russell still gunning for 2,600. 2,600 is still where we're heading. Oil kind of hit a wall. I saw lots of calls for a bullish breakout on oil. Guess what? We stopped at that 618 retrace right there. From this high, this low, 618 retrace, turning down, takes us down into the low 50s. Be careful. You've been warned. Gold. Oh my gosh. Who said that gold was probably going lower? Guess where it might be going. Yep. So gold, probably going to retrace for a little bit. Silver too. Although, oh, look at that. Perfect head and shoulders. Oh my goodness. Now, the only reason this might not work out is if you start seeing anybody in the mainstream media talking about this head and shoulders, sometimes they don't work if everybody sees it. I haven't really seen anybody talking about it, though. Look where that puts us. That'd be an interesting one. Bitcoin. Everything I said yesterday still holds true. We're still in this danger zone. If we can get through here, sigh of relief. Right now, have your plan in place. If we get back below this low right here, and then this one right here, probably going below 100,000. And that's a big stop out level for a lot of people. You'd be like, well, people buy Bitcoin like crazy. Not if they think it's going lower. We need to get through this $117,000 wall. If we can get through it, we could definitely see some upside. Ethereum. I need to see this through this downtrend of highs. I need to get up here, 44.50, retrace, retest from the upside. You know, last time we popped up and then didn't hold it. So this time we need to break through, hold, and turn higher. Get back through that high, whatever it is that we make here. And that indicates we're going to go up and possibly have enough energy to get through the red zone here. That was a caution back here when we hit it in August. We've been paused and retracing and, you know, trying to build some energy to get through that zone. If we can get through it, 6,200 would be the target. But if we break back, if it comes up and does that again, we're going lower than this low back here. Possibly much lower. Could go retest this consolidation down here at 20, 25, 2,700, 2,800, low 3,000s. NKD still grinding on up. Target's up there at 53,000. This is what concerns me, is this is ripping while this is not. Something's going on. Something's going on. And that money's not rotating out of gold and into Bitcoin right now. Where's it going? Back to cash. We're setting our sails for a bigger correction. Dollar is sitting here with a move down off of that test. Retrace, 618 hold. If we get through that, these next levels up right at 99 and 100. May retest the roadmap line from the top and then set us up to rally up to 102. Above 102, things start to get really spicy because big players that are short the dollar probably start stopping out. That'd be interesting. The narrative has been a weak dollar. All this stuff Trump's doing, gonna make a weak dollar, and it's almost like self-fulfilling prophecy right there in September. We made the lowest low we've had in a couple of years. This is not the most bullish price action we've got off that low, but it could turn into something more bullish. So we'll see what happens. Apple, just sitting there. I don't like the price action, but it has the historical pattern to go hit 276. Amazon, still struggling here. If we hold below this 618 right here, layoffs are generally bullish. So if we can break above it, targets on up here at 243, 247. Daily chart target up here, 257, 271. But if we hold down in here, break back below that low, tips the odds that we may see something way deeper, lower low than this low back here on Liberation Day on Amazon. Nothing's clear yet. And we're right up to the limit. We get above it, tips the odds we're going on back to trying to make a new all-time high. Google, cruising on up. Maybe heading for 304. Meta, getting above that 618. Gunning for 840. Be the next target up there. Well, 812, 827, and 840. Microsoft. Well, I'm not going to sell my short. I'm not going to close out my short until earnings here. We're gunning back up for that 1618, 565. I'm going to stay on it. Potential to retrace back in here. Still pretty elevated. Nvidia, not really doing much. Hadn't really done much. You know, this takes almost $25 billion to move a dollar. You can see that law of big numbers coming in here, kind of muting the price action here a little bit. So if we can muster the rally, 212 up here will be the target, but it may struggle to get up there because it takes a lot of billions of dollars to push this thing higher like that. You may be like, well, that just moved 20 bucks. Yeah, 20 bucks times 25 billion. That's a lot of money. That's a lot of money moving around. Tesla. Amazing performance here. Potentially going to break out and run. Get through that prior high. We are set up to run on up here to about 570. In my big picture, daily chart pullback target, 550. The watermelon seed squeeze, double go. We popped up, consolidated after we hit the target right there. Consolidated. Now if we break out again, that's the double go. Made that move. which was this right here, the initial watermelon seed squeeze volatility. And then we did the bounces that were smaller and smaller and smaller. Then we broke out, ran the distance, consolidated. We run the distance again, puts us right up here. So possible to hit 611. I actually have 600 calls sold against some Tesla shares just out the next week. It's so crazy. I got like, so crazy there's that much premium on those. So crazy to me. We do have the shareholder meeting coming up next week. That's kind of the big show right now. Next Thursday, I believe it is. Netflix. Cool. Thank you for crashing the chart here. Reload, refresh. Netflix still sitting in here, potentially at a point where it can bottom. So this fib line right here, this move down, this retrace, that move down, potentially hit the 1272 extension. Now, typically we don't, and you look at this as like A, B, C, but that's not correct because the A started here, the B was the bigger bounce here, and this should be the C, and C waves don't end in 3 waves. Like that's not typically the end. And that's a 3 wave. That's a 3 wave. That's a big drop. This may just be the A of a bigger ABC. So A's can end in 3 waves, and so this may be an A of a bigger potential setup here. We may see a big B wave retrace back up in this area once again, and then a bigger downside take hold on Netflix. So let's just draw this in for anybody paying attention here. So we may come right back up to this whole thing from this high to this low, this 618, where we've stopped numerous times now. It wasn't in place till we just made this low. If we rally right back up to that level one more time and reject, sets up a bigger downside. What does that look like? Looks like this. First move down, retrace, next move down, put us down here around 950, possibly even 880. So a little bit of volatility cooking on that one. All right, I go pull gainers. This thing's moving $2 more up in the pre-market. Look at that. That is a nuts move right there in Celestica. Regen. I don't know if we can pop, come back and retest the. This is a good pop through. We need to retest that breakout line, break back higher before I would be convinced we're going higher on Regen. Sherwin-Williams. Nice potential here, higher lows. If we can get through this high right here. And it looks set to go higher. That upside right now around 414. We can break back through these highs. Get the momentum, keep on going. UNH struggling to try to push through. I still need some sort of retrace here. I expect it here, but if we can push on up, we could do it up here. That would be quite bullish for going much higher on UNH. I'm not getting involved yet though. CHPK, there's the pullback. Here's the 618. Rejecting there in a 3-wave fashion sets up more downside. That would be 3 waves down, 3 waves up, and a potential for Another spill lower. CCJ keeps being ridiculous. Next target up 130. Carvana. 1, 2, 3 into a bounce potential. This can go higher again. Doesn't have to, we've got the 618 right there just above us at 376. Can go on up to 428. Party doesn't have to stop yet. Looks like maybe the magnet tool's on. There we go. 430. We get through that, come up in this area, and then take a spill. UPS up to the roadmap line. Done that before. Right up in here and here. Diving back through, probably going lower low again. At 618 of the big up. Still sitting down there at like 75 area. See, look at this, big up. 38 up to 230. Retrace back down to the 618. If we did that, it potentially sets up a much more massive move if we can come down here and bounce, break back through a 618 somewhere around 150. See how close I got to that. Puts the target way up here. If we can get through. There's the high, there's the low. Oh, look at that. On the money right there. How did I know where to draw that? Because I've drawn this a bunch of times. Done that. I draw fibs hundreds of times a day. That's where the 618 was going to be. And we get through that. There you go. Wayfair. Oh, yeah. Nice potential breakout here on Wayfair. If we can get through that 618, that 123 area, odds are we're going to see this rally on up here. Now, the danger here is we turn down in this area and go lower low. $244 next upside, LEU next upside. GLL. Yeah, GLL is looking really nice. Short gold. Boom. ATI. Wow. It's going to be a daily bounce. Clear that one off. We hit the downside target there. Looking at the retrace, and we're already up here at targets, but 116 above that. Corvo. Working on a reversal, but that was a beautiful ABC right into potential target zone. Move up. I need a retrace to give me somewhere to project off of. FedEx potentially done on its downside here. If that was the move up, that's the retrace. Draw this. This is the move up. This is the retrace to this 618 right there. And we get the continuation through the 618 here. We're looking at a move up in this area. 420 to 550. It's that big right there. That move, this move up, this retrace, that projection. The 618 we need a breakthrough. Right there around 260. So if we get through 260, sets this big upside target up here. Now we'll probably meet some resistance in here. Typical stuff. They're doing that. And doesn't that look more like stock charts than just ripping? That'll probably be the area we cruise on up to, somewhere in there. And possibly even up to like 700. So. Adobe. Whoa. This one needs a bigger like potential retrace. Look, that move down, that retrace. So we potentially bottomed in the current move, but still got some downside potential here on Adobe. Humana. This is what I expected out of UNH. That big move up, that big retrace, hold the 618, first move up, first retrace. If we break above that 300 area, game on. In fact, I'm going to send an alert there. I might grab some exposure to this popping up in this area. See that and possibly 470 area pretty quickly on Humana. I might do something there if options prices support it. If we get above 300, light. This keeps on being crazy. That was on my bullish list. Keeps on going. That was if anybody remembers the bullish breakout I talked about back a few months ago. Like things making all-time highs after a 3 to 6 month consolidation tend to outperform, and that's doing it. Roblox potential to come back to the roadmap line. What did PayPal do today? PayPal had earnings. Looks like they showed some positive signs here. Pop. If you played the put that we talked about on Market Masters yesterday, good on you. Good on you. Let's go look at the setups that are valid today. Got like 17 of those. ARL. So here's the high, here's the low. There's the entry, 17 target, not very big. I popped up really big. Pull this down. 24.75 negative profit factor. BANC. Here's the high, here's the low. This is my market roadmap pattern. If you wonder what this pattern is right here, it's a trend pullback continuation pattern. Support line at that yellow orangey line that I show off constantly. If you need that line, links in the description. Although I showed off the code yesterday on the stream, explained it all. So you can watch yesterday's stream too if you wanted that. But what this does, when we get this entry, which is a daily close or a candle close above the 618, this works on all time frames. You know, we're on the daily time frame here. So it'd be a daily close above the 618. It kicks off the extension to the 1448. That's a made up fib line for me. It's 90% of the way to the 1272. So 1448 is 75% likely to get hit. And 1272, 70%. By going 90% of the way there, you up the win rate 5%. So highest probability trade here on the daily close above the 618. That move happens 75% of the time. Oh yeah. I like it. I can trade it. It's repeatable. BKU. Here's a high, here's a low. There you go. 41.40 target. Doc. What's up, Doc? Here's the high, here's the low, there's the entry, and you could get filled here. This one might stop out, but great risk to reward right now. 1999 target. Pretty smoking on that one. FDUS. Here's the high, here's the low. Entry 22.49. This one's a double bounce. The algorithm entered back here. 26.90 target. FIBK. Here's the high, here's the low. Entry 34.87. FRST. Here's the high, here's the low. And, oh, I see what it did. It grabbed that high because of the little spike down below the roadmap line right there. There's the entry, 12.16 target. Hasbro. Entry 84, look at that, 36.75, 1 point. This is just a real good average. This one just works. Look at that. 36 trades, right on pace. Like, this is right on pace with the average. 75% of the time, it works. 1.2, that's like basically, this is the classic average ticker that does this. So this thing follows the trend pullback continuation pattern. And 84 is the target right there. HLI. Now, time frame on these. Average one takes 45 candles. If you want to cover 99%, not run out of time, you got to add 3 standard deviations. Standard deviation is 35 trading days. So that pushes it out to 150 when you add 3 standard deviations, which when you take that into calendar days is about 210 calendar days, 7 months to cover 99% time-wise. Now, the average is 45, and some of the research recently suggests that if one of these tickers takes longer than the average, then it's more likely to fail. It's kind of interesting. So here we go. 215 on the target right there. HLI. LSPD. Light speed. Here's the high, here's the low. Oh, I picked up that lower high right there. 1346, but if you go for the bigger pattern, be 1479. NUE. That already hit the target. Ring. Here's the high, here's the low. Entry 3360. RVLV. There's the high, there's the low, there's the entry, 25, 23. TFSL. Here's the high, here's the low. Potential entry. I like that one. Might put that as a double dip trade. 14. Yeah, I'm gonna make a note. The yin and the yang. Got a lot of stuff drawn back there. I'm just gonna delete it. Here's the high, here's the low. Entry 60 on the upside. And YMM already in it from back here. Another bounce on the way there. Here's the high, here's the low. And 1430 potential target right there. That's the list of potential entries. Bias for the day. Looks like we're going to grind higher into tomorrow's FOMC. That's what it looks like we're going to do. So as a reminder, 5 p.m. set your calendar reminder. 5 p.m. going live. 30 minutes of awesome. Now, we could dip if we plummet from here down here into tomorrow. If this takes a sudden death drop down here into tomorrow, one, that's increased volatility, but it also tips the odds that we're going to see a big explosion out of FOMC. Now, the other thing coming up on Thursday is the Trump-Xi meeting. T versus X. We got the Trump-Xi meeting out there in China, working on the trade deal. That could cause this, or that could cause this. So if we get this into FOMC or out of FOMC, we may see this on the trade deal. Could be a lot of volatility in the next couple of days. You know, this could be very violent, like we've seen the past couple of weeks. More of these, like, whoa, baby, whoa, baby, whoa, baby, whoa, baby, whoa, baby. So more of that stuff could be right over here. Be careful out there, everybody. I'll be in Discord hanging out, trying to find some good stuff. On Market Masters 11:30. Have a great day. We'll see you again tomorrow. Same bat time, same bat channel. Bye for now.